Today, I'm going to share with you a strategy that most people haven't thought about, where you can earn as much as 18% interest tax-free. And we've talked to you over the years about how to earn a higher interest and potential currency appreciation just by putting your money in the bank. Depending on when you bought currencies like the Georgian lari or the Armenian dram, you're probably up against the US dollar. Obviously, some like the Turkish lira, you're doing very badly. But the currencies that we've talked about, combined with 9, 10, 12% interest rates in the bank, that's been one strategy. Today, I'm going to share with you something else. Now, I'm not an investment advisor. This is not investment advice. You should do your own research. But I was recently in Brazil, and I found out a couple of things about how their stock market works, including how you can make up to 18% interest tax-free, not in a bank, but in the actual equity market. And so Brazil does not tax dividends on its stocks. There have been some rumblings about potentially changing that, but as of right now, dividends from Brazilian stocks are tax-free, and that surprised me. Singapore, Hong Kong, Malaysia, these countries are known for having tax-free dividends, which makes their equity markets more appealing for yield investors who live a tax-friendly lifestyle the way that I do. Okay, if you live in the United States, if you live in Canada, your dividends are getting taxed no matter where you invest. But if you live the way that we talk about, you have no tax where you live, combined with no tax on your dividends. That means no tax overall. I was surprised that Brazil, hardly known for being a tax-friendly country, had this. What I was also surprised to learn is their rules on how companies have to pay dividends, and it results in some really high dividend returns. Let me take an example of one stock. This is the energy company of Minas Gerais. It's a state near Sao Paulo. They produce about 1/8 of all the electricity in Brazil. They are, I believe, the fourth largest company of their kind. And as of today, as I'm sitting here, PE ratio of about 4.3 and a dividend yield of 16.7%, which under the current rules is tax-free. Now, this is not for all the utility companies. The second largest one in the country has a dividend yield of only about 7%. And yet compare that, for example, to Southern in the United States. Pays you 3%, give or take, a dividend. For someone like me, who does not live in the United States, I'm paying 30% tax on that. That puts me around 2%. So I'm basically 8xing my dividend return. Yes, I know you have some questions. I'm going to come to your questions in a minute. But let's just take the dividends at face value. More than 8-time return in Brazil. Look at a company like Hong Kong Electric. Very limited growth company, sells electric to Hong Kong Island. Dividends about 5.7%. Again, tax-free. So you are, I went to public school, almost tripling that dividend yield by being in Brazil. Substantial dividend payouts. Let's look at another stock. This is the oil company. Oil company's not in the best of shape right now. This is Petrobras, the preference shares. A lot of these stocks, they have multiple different ticker symbols, so it gets confusing. 17.88% dividend yield on a PE ratio a little bit under 8. And so we've compared that to Exxon. Similar numbers to Southern. I think under 3% dividend yield, under 2% for someone like me by the time you pay tax on that. You can see there's two things that I'm referencing here. For me, if you're going to be an international investor, international entrepreneur, and you're going to think internationally, you got to live internationally. Probably got to cut your cost of living. You're probably going to be happier. You're probably going to have more personal freedom. And yeah, you're going to have a more tax-friendly lifestyle to where when Brazil, Singapore, Hong Kong, Malaysia, etc., tell you, hey, our dividend tax is 0, your personal lifestyle choices don't add anything to that. The money just comes in so much faster. And I'll tell you why Brazil is of interest to me, because I did go there. Sao Paulo was nice at first. I feel like I stayed there a little bit too long, and I kind of got weighed down by it. There is, admittedly, an inefficiency there. I've never said Brazil is the most efficient government in the world. Let's not start comparing it to Singapore. But what I do like is geopolitically, huge country. I mean, just look at a map of South America. Huge country, huge population. Yes, they've said it's kind of the best country with the potential for decades now, but here's why I think it could have its moment. Look at all the trade with the U.S. And people think, well, when Trump's out of power, the next guy will solve it. That could be 4, 8, 12 years from now. And quite frankly, once you've ruined their reputation as a country, it may take more than just getting a new politician in to get it back. Because once the trade routes change, people may not want to go back to trading with the U.S. And so a lot of agricultural products that the U.S. used to supply to people like China, a lot of products that the U.S. used to supply to Europe, those countries are in South America. China has huge increasing influence in Central America, but also in South America. It is becoming the trading partner of choice in that continent. And talk of tariffs in the U.S. has only made that worse. Brazil is coming out as one of the big players for ag, and that's why the Brazilian stock market has been increasing. Now, you could buy an ETF like EWZ in the United States, and if you're a U.S. investor, that may be more efficient for you. However, again, particularly for someone like me, why are you paying dividend tax on stocks purely because they're listed in the U.S.? And, the yield isn't going to be as high as potentially picking out some of these stocks. Now, let's talk about growth. No doubt, U.S. companies have been some of the better performers in recent years. There was, in the mid-2010s, kind of a peak in emerging and frontier markets, which has given people like me time to go and buy up a lot of stuff on the cheap. But let's compare that Petrobras to ExxonMobil over the last year. Yeah, they're both not doing well. Over the last 5 years, ExxonMobil has lapped them. They're up 121% versus Petrobras is 44%. Now, I mean, you're going to get a lot closer to par with the dividend yield, and I'll come back to the currency issue in a minute, but no doubt you would have been better off investing in ExxonMobil. Now, we can look at the energy company stock, Energy of Minas Gerais, and we'll compare that over a 5-year period to what I personally happen to think is one of the better run utilities in the United States, Southern. The Brazilian stock's actually beating Southern over a 5-year period by about 29 points. And so that is not as common. I do believe that the moment for emerging market stocks is going to come. And so the challenges in Brazil, number one, you can't buy a lot of these stocks on many exchanges. There's 1 or 2 brokerage accounts in Europe that give you access. Most of the rest of them, including even in Portuguese banks and brokerages, just say, hey, we can always sell you the ADRs, we can always sell you the ETFs, let's say in the US market. And so now you're not getting the tax benefit anymore, and you're often buying into a fund rather than picking some of the highest yielding stocks that you choose. You can open a brokerage account directly in Brazil, including through a foreign corporation. The process is a bit bureaucratic, but you can do that. And so that is the one downside to this. The other issue is the currency risk. So if you look over the last year, the dollar's up against the real about 5.5%. Over the last 5 years, a little bit better, only 10%, so under 2% a year. However, year to date, dollar's down almost 12% against Brazil's currency. And the question is this the beginning of a trend? Now, no doubt, you might feel more comfortable with euros or Swiss francs. And overall, those currencies have also gone up 7, 8, 9% against the dollar. So Brazil's increase is only slightly higher than those that you might consider more of a flight to safety. But if you believe in emerging markets and you like yield, which I believe entrepreneurs should for at least part of their portfolio, you get money you can eat with, and then you leave the money in your business alone, this could be an interesting market to consider. Now, I'll tell you in a moment how you can use this to get a second residence permit and potentially even citizenship. If you'd like to learn how to open foreign bank accounts, foreign brokerage accounts, move your money to foreign currencies, get residence permits and passports, and do so in a way that protects your freedom, increases your option, and protects your assets, go to nomadcapitalist.com/apply. We help clients do all of that under one roof. We've got a network of hundreds of experts all around the world that we've worked with, many of them that I've worked with. It's a one-stop shop for global diversification and protecting your wealth and protecting your family. Now, here's the residence permit play. You cannot buy stocks directly or put money in the bank directly and get residence. But if you start a company with about $100,000 in assets, that company could potentially open a brokerage account. Now, you have to look at the tax implications of that. But that could be a way that if you want to kill 2 birds with 1 stone, you could buy into high-yielding stocks. You could get some diversification. You could get the asset protection because the assets are in Brazil, and you get a residence permit that you can live there as an investor. Now, Brazil's not a tax-friendly place on the personal side, and so unless you want to live there and be subject to personal tax, you're not going to get citizenship. However, if you want to live there, maybe your tax profile makes it easier to live in Brazil, you can apply for citizenship in just several years. But at the very least, you've got a residence permit in a huge country. I've been to Sao Paulo, I've been to Rio. Those are the kind of places that I like to go. People like to go to Florianopolis. Northern Brazil is experiencing a lot of growth. There's a lot of opportunities there, and it's a huge country. You can probably find somewhere that you like. And by the way, it's located on a map pretty far away from the chaos in the world, it wouldn't be the worst place to have in your back pocket as a plan B. If you don't want to buy stocks, you can put about $140,000 in a real estate. That can do the trick. I'm not saying that Brazil is the next Vietnam or the next Singapore where it's going to grow fast or be some asset haven. What I am saying is, as a yield play that gives you a free second residence permit, gives you diversification into a part of the world that I think is worth having, it's worth considering. It's another option for increasing your income and your options. Again, go to nomadcapitalist.com/apply. We'd be happy to help you figure out whether Brazil is right for you, whether other countries in South America are right for you. I happen to live in Colombia part-time. We help people move to Uruguay. I was in Paraguay next door. Lots of people came up to us. People love Paraguay. There's so many options. This is one of them. Nomadcapitalist.com/apply. We help you make sense of your options.